be a better one to get into because it hasn't quite gone yet is this one in the pound CAD. If you look at this on the 4-hour chart, the market has been moving down, as you can see there. It then pulled back somewhat. It then respected that trend line. So every time the market moves up, it doesn't quite get above the trend line. It's uncanny the way that this actually works. Every time it gets there, it goes short again, right? And all the while, it's kind of pushing on this, on the floor here at the 1.6200. So if we can get beneath that floor, if the market can break below there, then that's going to signal to us a short opportunity. We'll place our stops above the level over here. So we'll have quite a wide stop there, sort of 400 or 500 pips. You don't need to do that. If you're going to get involved in these trades, you could certainly put it above the 100 moving average or find a closer one. But one of the things that we do with our trading is we put in a catastrophic stop loss. It doesn't mean that that stop has to be hit every single time. All it means is that if something, like a disaster was to strike the market and the market kind of gapped up and moved really ferociously in the direction that's opposite to our trade, we're not going to wipe out our account. Most of the time, we close our positions manually. So we don't take profit automatically. We don't take profit. We don't take our stop losses automatically. We do it manually based on the price action, based on where the market is in comparison to the key levels. Okay, so if we were to get involved in this trade here, it broke lower, then it pulled back somewhat and went sideways, we would come out around that area there. We wouldn't wait for the stop to be broken. But by putting the stop loss out above, far away from the market, you're ensuring that you're not going to be whipped out of the trade on some silly news announcement, or that even if you've got your entry wrong, if you've got the direction right, you're still going to have an opportunity to make money. This is something I wrote about it to our members on Friday, and it's kind of like a road that Nikki and I really feel like we need to go down, because it's the thing with teaching people to trade, right? Is that you can teach someone a system. And systems are really, really easy to teach. If you can kind of recognize patterns and things like that, you'll pick it up relatively quickly. The problem is that there's a lot of discretion involved. And when you're reading charts and when you're reading price action and patterns, you may see it a little bit differently to the way that we would see it or a professional would see it. And what I'm trying to say here is I think it's a little bit unfair to expect new traders, okay, to be, absolutely on point with their entries, with their reading of the charts and all of that. So what we want to do and what we're trying to do is kind of develop a way of helping traders, teaching traders systems that doesn't require that they're perfect on every single entry. That almost assumes that they're going to get it wrong on some of their entries. Okay, and by doing that, we feel that we're going to have more and more and more successful traders in the markets. Of course, that means that those traders are going to have to be disciplined, because there'll be times when you need to stop yourself out. But assuming you can do that, then we think that that is the way to go in terms of trading education. Okay, so that was the pound CAD. We think that's going lower.